This is Julia Radditz. I am the principal broker and owner at Totem Properties at the Oregon coast. I'm here today because we're all experiencing a difficult time financially. Many businesses are being forced to keep their doors closed. People are being laid off from work, and income flows have stopped for many members of our community. So part of the relief provided by Oregon law includes the ability to apply for a forbearance on your mortgage. There's a lot of misinformation circulating about what forbearance is and how it can impact you long-term as a homeowner. And so today we are meeting with my friend Wilson Mak, who is a mortgage broker at Mak Mortgage Group. And he's going to help us discuss what you need to know about mortgage forbearance before you pursue this option. Hi, Wilson.
Hey, Julia. Thank you for interviewing me. And I'm Wilson Mak. I am an independent mortgage banker, broker, been in the business for over 20 years. So this is just another wave of what's happening in our current state. And definitely, like you mentioned, Julia, that forbearance is definitely something a lot of people are looking at due to the high unemployment rate. And there are some things that people have to know if they're going to choose that option, and especially, do they really need it, or is it something that they're thinking about?
Thank you. So let's take a step backwards. Can you explain what forbearance is to people?
Right. So forbearance is when a homeowner that has a mortgage on the property that they own, if they're unable to make the monthly payment, they can actually call the servicer. So I know everyone deals with the lender, like myself, but if you look at your statement, the statement is provided by the servicer. They service the loan that your lender put in place for you. So the first thing to do is to pick up the phone and call them and ask about a forbearance program. And what we typically see nowadays is if someone is having some financial difficulties, things are tighter due to job layoffs or maybe income reduction, they might start off on a 3-month forbearance where for 90 days, 3 months, no mortgage payment needs to be made. So that's what a typical forbearance is.
So Wilson, does forbearance mean forgiveness? Does that mean people don't ever have to pay those payments to their mortgage servicer?
So that's the thing that no one is talking about, and no media outlet is discussing that. They're just telling everyone, hey, do a forbearance plan if you would like it. However, there are impacts to it, and forbearance absolutely does not equal forgiveness. And here's an example, right? If someone was laid off, they decided to do a 3-month forbearance. And let's just take in this example that each month the mortgage payment, the full payment, principal, interest, taxes, and insurance is $2,000. So that means you skip 3 months because you have no payment. So you think you're saving $6,000. However, what happens when you get to that month 4, you're going to have what's called a balloon payment. You have to make up the previous 3 months and the current month. So you have to pay $8,000 all at once.
Which sounds like it could be a very difficult task for many people at this time.
It is. The whole issue is because they weren't able to make that payment, how can they come up with that one-time balloon payment when it's all due? They can't.
Sounds like less of a gift from the government than they're making it seem.
Correct. And there's some things that happen if you're unable to make that payment, because the forbearance itself it should not impact your credit. But if you don't follow through with a balloon payment, the usually one of three things happen. So the first thing is a loan modification. So they might say, okay, you can't pay everything at once. We're gonna modify the terms of your current mortgage and change it up so you're able to pay it back. But that's looked at as a negative event. If that doesn't happen, then you could end up going into a position where maybe you might short sale the property. Again, that's another negative event. And if it goes as far as possibly even a foreclosure, you can't make the payment at all for anything, even though you did a loan modification, then the bank's going to take it back and then sell the home at the courthouse. So all three of those scenarios, loan mod, short sale, and foreclosure, are negative events that will make your credit score go lower. And then also any of those three, if you're still in the home, if you wanted to refinance, or you were out of the home and you wanted to purchase, you're going to have seasoning requirements, because those are negative credit events where you might have to wait as little as 2 years all the way up to 7 years to be able to purchase again.
Very interesting. So it's important to look at the long-term goals for yourself as a homeowner. And it sounds like the very first step is really just to reach out to the mortgage servicer or the loan servicer. Are there specific questions you recommend people ask when they do this?
Yes. So when you're calling the servicer and asking for a forbearance program, don't just take it. They might just say, okay, here are the terms, no payments for 3 months, but you have to look at the fine print. And one thing that you really want to ask about is a pre-defined payment plan. So you want to have that payment plan set up in the very beginning before you even accept the forbearance, because if you don't, then it moves down the road to those other three items that we talked about. That's when it negatively impacts your credit and you have credit seasoning time frame. So if it's predefined up front, maybe you have a 5-year window where you can repay it back a little bit at a time with your current mortgage payment. That might be the way to go, but definitely ask about it up front and make sure there's no credit impacts or hits right out of the gate.
Is it reasonable to expect that you can get some sort of commitment from your servicer in writing so that people know specifically what is expected of them if they pursue this?
Yeah, because it's a contract. So with the forbearance package, they give you, usually you have to sign it, send it back. It has to be approved, accepted. So you want to make sure those predefined terms are in there before you sign anything and return it back to them to put in place for you.
Okay, very, very helpful. Is there anything else critical that you think homeowners should know about forbearance or what not to do at this point?
Yeah, I know a lot of people have been asking me, is this like 2008 all over again? And the answer is absolutely not. So in the early mid 2000s, there were a lot of loans where basically if you could apply for something and you wrote down whatever your income was, nothing was verified. So those things known as stated income, stated assets, those products, mortgage products, are no longer around. So right now, Americans have more equity than ever before. So it's highly unlikely that the homeowner is going to walk away from the home. So think about that, because I always tell people that their real estate is a long-term savings plan, and it's a great way to build wealth. and you don't want to jeopardize that. So if there's any way you can make your payments and not do a forbearance, definitely do that. But if you really do need to do it, make sure you get the predefined terms.
Excellent. Thank you. Wilson, that's amazingly valuable information. And again, it helps to just clear up some of the myths that are going on right now about forbearance. There's a lot of noise out there, and it's hard to know who to trust and where to get valuable info. So again, if people are considering mortgage forbearance, your first step is really going to be to speak with your loan servicer and go through the steps with them. It's important to have a plan, even if you have to make some adjustments as we move through the world. But knowing the right questions to ask and having professionals to consult with is a critical piece of that. And we just want to remind you that both Wilson and myself are available to homeowners or home purchasers for any of these or other real estate or financing related questions. All right, Wilson.
And Julia, I want to say to you, thank you so much for having me on here. And what you're doing is making a huge impact to your local community, because everyone has to be informed about what is happening with the current state of all the advertising, all the media around foreclosures. And the more that you can educate someone, then you can empower them to make the best decision for themselves and their family. And again, Julia, thank you so much.
Thank you, Wilson. Stay safe. We'll talk to you soon.
Talk to you soon. See ya.